Our final learning objective, and this is focusing on discussing the classification of revenue and expenditures, and here we will also learn the journal entries to record and close the budget. So let's start with expenditure classification. You would have already been familiar with the funds. So expenditures can be classified according to the funds. Either it is the general fund, the special revenue fund, the permanent fund, debt service fund, or capital projects fund. Expenditures can also be classified according to the function or programs. So a function or program could perhaps be public safety, health and welfare, election, court, transportation, or even the corrections, the prison. Organization unit is also another classification of expenditure. So this could be the police department, justice department, street department, and the like. Activity is another classification. This has to do with a specific and distinguishable line of work performed by the organizational unit. For example, food inspection, waste disposal, or waste collection. Expenditures could also be classified according to its character. So this might be current expenditures, so those expenditures that will be expended during the year, or it could be capital outlays. Capital outlays normally relate to long-term assets, or it could even be pertaining to debt servicing. So the interest that you have to pay for the long-term loans. Revenues and estimated revenue classification. So revenue usually includes all financial resource inflows. So anything that increases the fund balance will be part of revenues or financial resource inflow. Now, a government normally relies heavily on, like what we've said earlier, taxes. Taxes of different types. A government may only raise revenues from sources that is available to them by law, by legislation. So revenues are classified again by fund, by source, or its secondary class. So we'll focus on the major revenue source classes in the next few slides. So there are quite a number: taxes, special assessments, licenses and permits, intergovernmental revenues, charges for services, fines and forfeits, as well as the catch-all class, which is just called miscellaneous revenue. Let's focus first on taxes. Taxes are an important source of funding for governments because they provide the largest portion of revenue, and they are compulsory contributions, compulsory to the citizens. Revenues from taxes is recognized using the modified accrual basis. Now, some use the cash basis, but it is recommended by the GASB to use modified accrual basis. So what does this entail? It means that revenues are recognized when it is measurable and when it is available. So these two must both be present: measurable and available. There are several types of taxes. So let's look at the first one, the ad valorem property tax. The term ad valorem simply means based on value. Ad valorem taxes are a major source of funding for local governments. So the local governments would be the city council, the county, and they are typically assessed, this ad valorem property tax are typically assessed on real property or personal property. There are several steps in determining the amount of taxes to be levied. So the first step is to assess the property. So the taxing authority determines the property value. And the second step is to set the tax rate. There are two ways of setting the tax rate. The first one is just to multiply the property value by a set rate. So they might say historically they have been charging 1.5% of the value of the property. So that would be the tax rate that they'll use for the ad valorem tax. The second one is this, what we call treating property tax as a residual tax, and then you determine the rate. So it's shown here the different steps for the residual source approach. So first, you estimate the revenues from all the sources, and then you subtract the total of other source revenue from proposed appropriations. Okay, the best way to show that is to put in some figures. In your textbook, illustration 3-6 provide an example. So let's assume the net assessed valuation of property taxable by the general fund of this town, Merrill Town, is $214,348,000, and the gross property tax levy is set at $3,731,250. So these figures are provided in illustration 3-6. So what we're going to do is we will just divide this gross property tax levy, $3,731,250, by the net assessed valuation of property taxable by the general fund, $214,348,000. So you'll get this figure, 0.017409. So you can either charge at a rate of 1.75 per $100 assessed valuation, or you can show it as $17.41 per $1,000 assessed valuation. All right, so the residual value will require a bit of calculation. All right, the next type of tax that we're looking at is interest on and penalties on delinquent taxes. So when taxes are not paid by the due date, they become delinquent. When the tax is delinquent, the government can impose on interests. So just like when you borrow from the bank, you get charged interest. You are in a way kind of borrowing from the government if you don't pay your taxes on time. So the government can impose interest, and on top of that, they can have a legally mandated addition. So apart from the taxes owed, the interest will be added, and there could be penalties as well. And that's another source of income for the government as well. So try not to pay your taxes late. That's the moral of the story. All right, other types of taxes: sales taxes, income tax. I think most of us who are earning will be paying our income tax. And most of us in many countries, like here in Australia, where I am from, we have what we call GST, goods and services tax, and gross receipts taxes. Now, the revenue from these taxes should be recognized in the period in which the underlying sale or income earned or gross receipts generated takes place. And the basis of accounting would be the modified accrual basis. So remember that under the modified accrual accounting basis, you recognize revenue when it is measurable, that's number one, and when it is available. So the two criteria that must be present: measurable and available. Special assessments is another type of tax. Now, unlike ad valorem property taxes, which is based on the value of the property, of all properties in the county or in the jurisdiction, special assessments are not levied to all taxable properties. Instead, they are levied only against the properties that are deemed to benefit from the service or improvements provided by the local government. When we're talking about service type special assessments might pertain to things like routine services that are offered on top of what is offered to the general public. So for example, if you are living in an area up the mountain where it snows and the government needs to plow the snow, so there will be a special assessment for snow plowing. Improvements, so special assessments for improvements. So this may pertain to capital improvements that benefits a certain area. So for example, there is a beautification of the national park in your area might be taxed with this special assessment tax for a capital improvement. Let's look at licenses and permits. Now there are different types of permits that a county or a city council might impose. So it could be a building permit. So if you want to build a house, you need to apply for a building permit. So that would be another source of income. Vehicle is very common. So as long as you're owning a motor vehicle, you will be asked to pay for vehicle license. And in many jurisdictions, if you have a pet like a dog or any other animals, you might have to be required to apply for an animal license. Business license is another one. So if you would like to run a business in that area, you will be required to get a business license, and therefore that's another source of income for the local government. Intergovernmental revenue, according to GASB. All right. Grants and other financial assistance are transactions in which one government body transfers cash or other items of value. It could even be an incurrence of liability, and it's being either transferred by another government, an individual, or an organization. This is used as a means to share program costs or to subsidize other governments or entities which are otherwise not able to fund certain services, for example. Now, grants and other financial assistance are non-exchange transactions, and they may be government mandated or voluntary. When we say non-exchange transactions, that means when you're transferring funds from one government body to the other, there is no exchange of goods or services, right? So it's more like a donation, because if you are getting or transferring funds in return for a service, then it's not considered intergovernmental revenue, right? Charges for services. So if you are transferring funds from one government agency or one government body to another and you are receiving goods or services, then that's a charge for service. So this is what it is. So charges for services might be in the form of tuition fees. Court costs, it is another one. Zoning fees, subdivision fees, and all that might actually be dependent on the zone that you are in. So there are zoning fees. For example, if there has to be rezoning of a particular subdivision, that would be a service for which the local government could be charging extra. So all these are examples of charges for goods or services provided by a government entity. Fines and forfeits. Now, revenues from fines and forfeits could include fines and penalties for commission of statutory offenses. For example, you're overspeeding and you get a ticket, so that would be a fine. All right? So that's another source of income, by the way, for the government. Forfeitures might be in a form of, for example, the house owner is not able to pay for their property tax for many years. It is possible that the county or the city council can actually forfeit the house. All right, so forfeitures of amounts held as security against loss or damage or collections from bonds or sureties placed with the government. Other miscellaneous revenues. So these might be from private contributions or donations. It could be from rents or royalties. So the government might have a building that it could be renting out, or it could be in the form of interest, that excluding the interest on delinquent taxes, or it could be public enterprise contributions. There are, for example, water, utility, electricity companies that are owned by the government, or airports. Airports in many countries are owned by the government. So these are public enterprise contributions, as well as escheats. Now, escheats just pertains to the taking of property in default of legally qualified claimants. Budgetary control accounts. Now let's go back to these budgetary control accounts. Remember, there are a number of budgetary control accounts that actually directly related to the operating statement accounts. And you will remember this from illustration 3-3 that we've looked at. So under the operating statement account, you've got revenues, and the corresponding budgetary account is estimated revenues. So remember that if you have a credit balance for revenues in the operating accounts, therefore your budgetary accounts estimated revenues, this one here, will have a debit balance. If you're still not quite familiar with these terms, I have provided here the descriptions of each. So for operating accounts, you've got the OFS, the other financing sources, which is also having a credit balance. There will be an estimated OFS in budgetary accounts, and that will have a debit balance. Appropriations will always have a credit balance because it is linked to the expenditures account in the operating accounts, which has a debit balance. Estimated OFUs in budgetary accounts have credit balances because it's the counterpart of other financing uses, OFUs, in operating accounts that has a debit balance. Now notice that it's only this encumbrance that has no specific link to the operating accounts, and there is a reason for that. We will see that later, because encumbrances never appear on the balance sheet or operating accounts. It's a temporary account, as you will see. In fact, all budgetary control accounts are temporary accounts, but they need to be integrated to the general ledger and subsidiary ledger, because remember that budgets are legally binding for governmental administrators. All right, so remember that an encumbrance will normally have a debit balance because it is a commitment to make an expenditure. All right, so from this point onwards, we are going to do the journal entries to record the budget. So first, let's assume that estimated revenue of 1,277,500, which will come from taxes of 882,500, intergovernmental revenues 200,000, and licenses, permits 195,000, have been legally approved as the budget for the general fund for the fiscal year ending 31st December 2020. So the journal entry would be to debit estimated revenues for the total amount of 1,277,500 in the general ledger, and we are crediting budgetary fund balance of the same amount. So that's our entry in the general ledger. And in the subsidiary ledger of the estimated revenues, all right, so the estimated revenues ledger, we are going to record a debit for taxes of 882,500 because that's the approved budget for taxes, for intergovernmental revenues 200,000, and for licenses and permits 195,000. Let's move on. The total appropriations and other financing uses legally budgeted for 2020 for the general fund should also be recorded in the general fund control accounts. And the amounts appropriated for each function itemized in the budget should be recorded in the subsidiary ledger accounts. So the journal entry using assumed budget amounts, all right, would be to debit budgetary fund balance. Now, where do we get this from? Well, this is just assumed figure, and it's given in the real world. The figures will be provided to you. All right, if you are the one who is doing the journal entry, somebody else would have provided these figures to you. So we are supposed to debit the budgetary fund balance for the appropriation. So it looks like whoever is the person in charge of appropriating, they have decided, or it could be a committee that decides the appropriations. They must have authorized the appropriation total of 1,636,500. So we'll debit budgetary fund balance, and then we'll credit appropriations 1,362,000, and these figures are provided, and credit estimated other financing uses of 274,500. Now, that is the entry to the general ledger. The subsidiary ledger entry would be in the appropriation subsidiary ledger. You will record, as given here, general government figure is 1,150,000, and for public safety is $212,000. So the total of these two in the appropriation ledger should be equal to the credit to the appropriations amount. So that's 1,362,000. The total of general government and public safety will be that amount. So what we're saying here is, out of the 1,362,000 that has been approved, authorized, appropriated, 1,150,000 will go to general government, appropriated for general government, and 212,000 has been appropriated for public safety specifically. This estimated other financing uses of 274,500 will also be recorded in the credit side of the subsidiary ledger for estimated other financing uses. Interfund, so this is coming from interfund transfer out to other funds, 274,500. Now, what you would notice here, and I'd like to emphasize this, this is actually an example taken directly from your textbook. In this scenario, you would notice that the government is planning to expend more resources than it will generate in revenues for that period. Remember, from journal entry number 1, the budgetary fund balance is only 1,277,500, and yet they have appropriated a total of 1,636,500. How can they do that? Well, it might be that in the past they have some fund balance remaining, all right, and therefore they are able to appropriate. If they don't have fund balance from the past, then they won't be able to do it, all right. There has to be sufficient available fund from prior period. Okay, let's move on to, well, how do we record receipt of revenues? So let's assume that the general fund collected revenues in cash during the month of January from licenses and permits, 13,200, from intergovernmental revenue, 61,900. In the general ledger, we'll be debiting cash. Total of 61,900 plus 13,200 is 75,100. And what do we credit now? Now, we'll credit now revenues because this is actual revenues collected. So we will credit 75,100. And in the subsidiaries ledger for revenues, we will put in a credit for licenses and permits, 13,200, and intergovernmental revenues, 61,900. Okay. Let's continue. You'll notice that in illustration 3-7, it is shown here a form of revenues subsidiary ledger, and it details the licenses and permits class. So in January 1st, when we've got that budget estimate of 195,000 from journal entry number 1, we will be showing that in the estimated revenues column, and that's a debit. So when we have collected in journal entry number 3, 13,200, so we will record in the revenues column 13,200 collection. The balance column will show us how much are we still expecting to collect for the rest of the fiscal period. So it looks like we can still expect $181,800 more. All right, remember this is only January. If their fiscal period starts in January 1st, they still have 11 months to go. Let's move on. Budgetary control of revenues. How do we do this? Each revenue account should have a comparable estimated revenue account. This is done to facilitate comparison throughout the year of the actual revenues and the estimated revenues. Now, why do we need to do this comparison? Because we want to spot any significant differences. So if there are material differences, they should be investigated to determine if the estimates used are no longer realistic, or if actions need to be taken to ensure the realization of estimated revenues. If their estimates are unrealistic, then they will have to adjust. That's why, do you remember in the form that we have seen, when you have to show the actual and the budgeted, you have the budgeted original and then you have the budgeted final. So if the estimates are unrealistic, they might have to adjust it. So the original budget will be changed and then it will show in the final budget column. All right. Now, if the estimates were realistic, but it's just the person who's supposed to do the collection that's not doing their jobs, then at least they can do something about it to rectify the situation. Let's talk about encumbrances and expenditures. You would remember that I've shown this before. So once we have appropriated the fund for a specific purpose, all right, what we need to do before expenditures and disbursement occur is that part when we record encumbrance, right? So encumbrance is really the thing that happens after appropriation and before expenditure. So when each purchase order and contract have been reviewed, all right, before it is signed to determine that a valid and sufficient appropriation exists, there is that procedure that has already taken place. All right, so they've already checked and they said, yep, that's valid, yep, that's valid, and yes, we have enough money. We have enough money appropriated for that purpose. Now, once that is done, all right, it's important to record the fact that the appropriation has been encumbered in the amount of the purchase order or contract. So once you've entered into that purchase order and contract, you are already setting aside from the appropriation that specific amount, and that set aside figure from the appropriation is what we call encumbrance. When the goods or services for which encumbrances have already been recorded are now received, all right, so you set aside the amount for the contract, but it's just a contract. We haven't received the goods or the service, all right? So it will remain in the encumbrance account. Once we have received the goods or services from the suppliers, that's when we will consider that the amount it's not just encumbered but expended, okay? So when do we move it from encumbrance to expenditure? When there is an existence of liabilities. So let us show this in terms of journal entries. Let's assume that early in January, purchase orders are issued pursuant to the authority contained in the general fund appropriations. Assume further that the amounts chargeable to general government is $38,000 and for public safety $7,400. So the journal entries for encumbrances would be debit encumbrances for the period 2020. So we'll just call it encumbrances 2020 so that we know that it has to do with 2020, not 2019, not 2021. Okay? So the total of these is 38,000 plus 7,400, so that's 45,400. We debit encumbrances 2020, and what do we credit? Well, we just credit the encumbrances outstanding 2020 for 45,400. That's our entry in the general ledger, and then we go to the subsidiary ledger. The encumbrances ledger will now record 38,000 on the debit side of the subsidiary ledger, 38,000 under general government, and for public safety, 7,400. Let's move on. So just to recap, when goods or services for which encumbrances have been recorded are received, and we receive the supplier's invoices, and this has been approved for payment, then the accounts should record that appropriations have been expended and that an actual liability exists. So how do we do this? Well, we will show you in entry number 5A, all right? Because entry 5A simply reverses entry 4 to the extent that purchase orders are filled. All right. Remember, in entry number 4, we have debited encumbrances for 45,400. So let's assume that we've already received, all right, some of that goods that are in the contract for 45,400. So the amount of goods that we have received according to the budgeted amount is 42,000. Okay, they didn't deliver all the 45,400, not all of it. We still have another $3,400 left. They've only delivered 42,000 and we have been sent the invoice. So the entry in entry 5A is reversing entry 4. We debit encumbrances outstanding 2020 for 42,000 at budgeted amount, and we credit encumbrances 2020 at 42,000. In the encumbrances ledger, we will record how much of that 42,000 is for that general government. It's 35,000, and for public safety, it's 7,000. Okay, what do we do next? So that's entry 5A. The balance remaining in the encumbrances control account and in the encumbrances outstanding account is the total estimated dollar amount of purchase orders and contracts that are outstanding. So that's the one that I was talking to you about earlier. Our budgeted amount agreed as per contract was 45,400. They have delivered to us $42,000 worth, so the balance of 3,400 is still remain outstanding. Now, the expenditures and the liability account must both be recorded at the actual amount the government agrees to pay the vendors who have filled the purchase orders. And this is where we will see entry 5B might have a slightly different figure from entry 5A. So the fact that estimated and actual amounts differ causes no accounting difficulties as long as goods or services are received in the same fiscal period as ordered. So, according to our budget, we should receive these. When the goods or services are delivered to us by the suppliers, it should have a $42,000 amount. All right? But when the invoice arrived from the supplier, they're charging us 42,400. Perhaps they might say, we have to charge you extra because we deliver it and we've used different delivery company, for example. And we said, the government might just say, yeah, that's fine. As long as we can get it immediately as we need it, we don't mind. So the actual amount owed will be recorded in journal entry 5B. So how do we record it? We'll now debit expenditures 2020 for the actual invoiced amount of 42,400, and now we'll credit the liability. Vouchers payable 42,400. Okay, in the expenditures ledger, the subsidiary ledger, we will be recording a debit to general government, 35,100. So out of this 42,400, 35,100 pertains to general government and 7,300 pertains to public safety. All right, and we're showing that on the debit side of the subsidiary ledger. Moving on. So we're looking at budgetary control of encumbrances and the incurrence of expenditures. I'd like to just show you that the estimated dollar amount of purchase orders outstanding against each appropriation is disclosed by the subsidiary accounts. And this is shown in an example here, illustration 3-8. So we are looking here at general government. Okay. In January 2, as per journal entry number 2, okay, journal entry number 2, you would recall, has this. We've done this, all right. On the 2nd of January, we have appropriated 1.15 million. On, let's just say, on the 3rd of January, entry number 4 showed that we have encumbered 38,000 of the general government fund. So that, as you can see, will be shown there. And let's just say later in January 17, for example, your entries in journal entry 5A and 5B would be reflected accordingly. So you can see there the figures where we are getting it from. So this is your encumbrance, this is your expenditures, and these are your appropriations column. All right, so we're showing it on the general government ledger. Okay, so the 35,000 was from journal entry 5A, and the 35,100 is from journal entry 5B. All right, and the balances. So the balance for encumbrance is 3,000 remaining, because we have encumbered 38,000, for which 35,000 has already been expended. Okay, so we have 3,000 left in the encumbrance. We have a cumulative balance in expenditures of 35,100, and in terms of appropriations, we still have 1,111,900 left. All right, so just a recap on encumbrance. Encumbrances is a control account that is related to the appropriations account. Okay, and they are related to appropriations and expenditures account, as you can see in journal entries 2, 4, and 5. So in order to accomplish the matching of appropriations, expenditures, and encumbrances necessary for budgetary control, the subsidiary account classifications of all these 3 accounts must correspond exactly as shown in this illustration 3-8. Okay, now what happens if, so I just wanted to once again flag this out. This is your budgetary control flow. So the expenditures budgetary control flow starts from appropriation, then encumbrance once we already have the purchase contract, and then expenditure once the liability exists because we have received the goods and services, we will consider it as expenditure. And once we have paid we haven't done this in our example, but we have a vouchers payable. But once we pay the voucher payable, so we debit the voucher payable and credit cash, that's your disbursement. Okay. Now, what happens when we have to revise the budget? So revision of the budget. During the fiscal year, comparisons should be made between budgeted amounts and the actual amounts. A review may be necessary in order to determine whether the budget appears realistic or whether changes should be made in light of current information about, for example, local economic conditions and the like. So if the budget is legally amended, appropriate journal entries must also be made to record the changes that would adjust your budgetary accounts and budgetary fund balance. So here is an illustration. Assume that a review indicated, we're continuing with our illustrative example, let's assume that a review indicated that an additional federal grant in the amount of $60,000 would be received in the fourth quarter. Tax revenues are estimated to be $50,000 higher than originally budgeted, so this is good. So our taxes will be higher than expected. We will get additional grant of $60,000. Life is looking good, isn't it? $60,000 extra, $50,000 higher tax, so that's $110,000 extra. And guess what? It says here, expenditures in general government will be lower than anticipated, resulting in a $75,000 reduction in the general government appropriations. Well, this is the best scenario, isn't it? Our revenues are expected to increase. Our expenditures are expected to decrease. All right, so how do we prepare the journal entry? All right, we will be debiting estimated revenue for $110,000. Why $110,000? It's the total of the $60,000 grant, additional grant, and the $50,000 additional tax revenue. All right. We're debiting estimated revenue, and we're also debiting appropriations of $75,000 because we are expecting a lower expenditure. So we are kind of reversing the appropriation. So debit appropriations of $75,000, and we will credit the budgetary fund balance of for the total $185,000. In the subsidiary ledger, we will also record estimated revenues ledger. Taxes, additional taxes expected is $50,000, so we'll put a debit to $50,000 taxes. Intergovernmental revenues of $60,000, that additional grant that we are expecting. And the appropriations ledger will also be debited for $75,000 pertaining to that lower than expected expenditure. Okay, so finally we're getting close. Closing entries now. All right, at the end of the fiscal year, what do we do with the budgetary accounts? Well, these budgetary accounts will be closed by simply reversing the original budgetary entry made at the beginning of the fiscal year, along with any amended budget entries made during the year. So, where do we get these figures? Well, the original budget was recorded in entry numbers 1 and 2, and the subsequent changes was recorded in journal entry number 6. So I have reproduced journal entries 1, 2, and 6 here so that you can see where we're getting the figures from. So the journal entry to close, we will close it by just reversing it. If it has a credit balance, it will be debited. If it has a debit balance, it will be credited. All right, so that's how we will close these accounts. So to close the account, we'll need to debit appropriations for $1,287,000. You might say, where do we get that figure? Now, appropriations, where can we see these appropriations? It was in journal entry number 2. It's credited there for $1,362,000, and here debited in journal entry 6 for $75,000. So $1,362,000 minus $75,000, that means we have a credit balance in the appropriations of $1,287,000. It has a credit balance. To close it, we'll need to debit it, right? So that it can be zeroized. That's what we're doing in closing entries. All right, so we have debited appropriations, $1,287,000. We also need to debit estimated other financing uses. Where can we see this? There's $274,500 there. Well, there's only one figure there, and that's from there, journal entry number 2. It has a credit balance here, remember? And so to close it, we'll need to debit it, okay? Next, estimated revenues will now be credited. Remember, estimated revenues has a normal debit balance. So to close it, it will be credited. Where did we get the 1,387,500? Well, it comes from journal entry number 1. We've debited it, the estimated revenues, for 1,277,500. And in journal entry 6, when we receive additional grant and an increase in taxes, that's 110,000 extra estimated revenue. So the total of that is 1,387,500. So it has a debit balance, so to close it, we'll need to credit. Okay? Budgetary fund balance. Where do we get this 174,000? There are 3 places where we have recorded budgetary fund balance. In journal entry 1, we've credited it for 1,277,500. In journal entry 2, we have debited budgetary fund balance for 1,636,500. And in journal entry 6, we have credited it by 185,000. So it will still have a debit balance of, so when you add, when you actually deduct 1,277,500 from 1,636,500 and also deduct 185,000, you will still get 174,000 and it's debit. All right. So to close it, we will need to credit 174,000. All right, so that's the journal entry to close in the general ledger. What about subsidiary ledger? Well, let's look at estimated revenues ledger. Taxes, we have 932,500. Where did we get this figure from? From entry number 1, we have debited it for 882,500, and entry number 6, we have debited it for 50,000. So the total of that is 932,500. And because it has a debit balance, to close it, we will need to credit it. All right. Let's go to the next item, intergovernmental revenues, 260,000. Where do we get that 260,000? In journal entry number 1, we have debited it for 200,000, and in journal entry 6, 60,000. So that is 260,000 debit balance. To close it, we'll need to credit it. Okay. Next, licenses and permits. Now this is easy because there's only one amount or one place where we have recorded licenses and permits, and that is in journal entry number 1. 195,000 debit. So to close it, we'll need to credit it. Okay. Let's go to the appropriations ledger this time. General government, 1,075,000. Where do we get that figure? In E2, journal entry number 2, we have a credit of 1,150,000. And in journal entry number 6, we have debited it for 75,000. So the difference, 1,150,000 minus 75,000 is 1,075,000, and it still has a credit balance. So to close it, we'll need to debit it. All right. Public safety, 212,000 is straightforward. We've seen this in journal entry number 2. Here we go. And so it has a credit balance. So to close it, we'll just have to debit it. And finally, interfund transfer out to other funds is 274,500. Where did we get that from? Journal entry number 2. It has a credit balance, and so to close it, we'll need to debit it. So that's why it is here, debited. All right. So note, that's the journal entry to close. Note, encumbrance details are not reported in the financial statements, but are disclosed in the notes to the financial statements. There's an exception to this when the outstanding encumbrances apply to restricted or committed or assigned resources. if that is the case, the encumbered amount may be reported in the balance sheet as part of that classification of fund balance, and it will be, but despite that, it will still not be shown as an encumbrance in the actual balance sheet. All right. So that is the closing entries. Let's go to accounting for allotments. So sometimes it is necessary to regulate the use of appropriations so that only specified amounts may be used from month to month or from quarter to quarter. The purpose of doing that is for control. It might be that if you use so much of your appropriation at the beginning of the period, then you have nothing left at the end of the period. So a common device to regulate expenditures is to use allotments. All right. So what are allotments? This is simply an internal allocation of funds on a periodic basis. So either quarter to quarter, month to month. And it's usually agreed upon by the department heads or the chief executive. So the allotments may be recorded in ledger accounts beginning with budgetary entry, where unallotted appropriations would replace appropriations. So rather than just putting appropriations, we'll put unallotted or allotted appropriations. All right. So using, just for illustrative purposes, using the numbers given in entries 1 and 2, a combined entry to record the budget would be as shown here. All right. The figures are again taken from journal entries 1 and 2 that we did. So we will be debiting estimated revenues of 1,277,500 and debiting budgetary fund balance of 359,000. You might say, where did we get that figure? That figure is simply the difference between 1,277,500, we're crediting budgetary fund balance here, and we're debiting budgetary fund balance for 1,636,500. So the difference between these two figures is 359,000. And because the debit to budgetary fund balance is higher than the credit, so we are debiting it here. Budgetary fund balance, 359,000. And what do we credit? Instead of crediting just appropriations as what we did earlier on here, we will be crediting unallotted appropriations for 1,362,000, the same amount that we did there, and crediting estimated other financing uses for 274,500. All right. Now, assume that 342,000 is allotted for the first period. So 389,000 would be for general government. We're allotting general government 389,000, and for public safety 53,000. What would be the journal entry? So we will be debiting now the unallotted appropriations for 342,000 and crediting allotments for 342,000. Then in the allotments ledger, we will be showing on the credit side general government 289,000 and public safety 53,000. All right, so this is it. We have reached the end of topic 2. And I just wanted to once again bring you to the verse that I have introduced at the beginning to remind us that diligence and honesty are very important virtues. Like what Apostle Paul said, pay to all what is owed to them, taxes to whom taxes are owed, revenue to whom revenue is owed, respect to whom respect is owed, honor to whom honor is owed. And a great philosopher by the name of Plato, he's an Athenian philosopher, he once said this: when there is an income tax, the just man will pay more, and the unjust man less on the same amount of income. Now, where do you want to be part of, just or unjust? This is the end of our topic 2 lecture. I will be seeing you for discussion.